Wednesday, February 17th. Welcome to Market Foolery. I'm Chris Hill. With me today, Mr. Bill Barker. Good to see you.
Good to be here.
We've got hotel earnings. Warren Buffett and his team have gone shopping. We'll see what they've been buying. And, you know, the shopping spree that they've gone on leads nicely into the consumer spending numbers from January that came out this morning. Retail sales in January up more than 5%, particularly nice numbers for home furnishings, home improvement, electronics. It's only one data point, but it's a pretty bullish data point for the U.S. economy.
It is. I don't know how much there is to add onto the data, except it's something that, points to good times, well, maybe not ahead, in January as a result, in part, of the checks that went out, and some people who got the $600 checks from the government, and to call that good times is an unfortunate choice of words, which I should take back. But spending times, there are many people who had money to spend in January that they didn't previously have, and they spent it. And there's been a question about how these checks are getting used, whether they're being put into savings, whether they're being put into, trading stocks in some cases. And these numbers reveal that to a large extent, what they have been used for is exactly what they're designed for, and that is people buying things they need.
Definitely a data point to keep watching, particularly you think back to, 9-10 months ago when in the early days of the pandemic, the personal savings rate in the United States shot up to the low 30s. So, yeah, as you said, nice to see that the checks are being put to use. Sticking with the spending theme, we've got shares of Tractor Supply hitting an all-time high today, not based on their earnings, which came out in late January, but Tractor Supply is buying Orscheln Farm and Home. They're spending just under $300 million to do it. This is a retailer with 167 locations across the Midwest, and Tractor Supply is buying growth, and the market appears to be applauding this move.
Yeah, they're getting about 180-ish stores. Their Tractor Supply, under the Tractor Supply brand, has about 1,900 and change stores. So it's about 10% store count growth on that side of the business. They've also got about 160 stores in PetSense, which is a smaller competitor to Petco and others in the pet market. So really, they're growing stores at between 80 and 90 stores a year, roughly, right now. So they're buying about 2 years of growth. They're buying that for slightly under $300 million. They say that the earnings it's going to be immediately accretive to earnings. So that once the deal is approved and goes through, they'll be earning more money per share. So that is one indication of a good use of money. And it's one that makes complete sense, since the business is largely the same, has largely the same clientele. It's a little bit more of a Midwest location for Orscheln, and it allows Tractor Supply to not compete head-to-head in those markets with things that, in the places that it wants to grow, and to just acquire all those sales instead. And with its larger scale and more developed online operations, to actually achieve the synergies which are always pointed out in a merger, but don't always happen.
So with this acquisition, and thank you for reminding me of the fact that under the Tractor Supply umbrella is that PetSense brand, because I almost always forget that it exists. And with this acquisition, the namesake side of the business becomes just that much bigger. At some point, do they start to look at spinning off the pet business because it just becomes a smaller and smaller part of, should they just focus on the namesake brand? Because that seems to be doing pretty well.
They pretty much do focus on the namesake brand. PetSense was an acquisition a couple of years ago. They just took a write-off in the last earnings report for recognition that the PetSense acquisition was not as valuable as it was being carried on the books, and so there was some amortization, some issues that they're rectifying in their numbers now as to the attractiveness of that brand. It's an overlapping business. PetSense, there's a very large pet business within Tractor Supplies themselves, so it's an overlap, and it's a good time to be in the pet business, but it really is a brand that doesn't have anywhere near the power that Tractor Supply itself has. So PetSense is really a very small part of the operations. I would say a smaller part than this acquisition is going to turn out to be. And it raises the question about the company's abilities in these acquisitions. It had a more successful one with Dell's, and basically those operations have all been rebranded to Tractor Supply. Whether that happens with Orscheln is unknown right now, but I would doubt that it happens in a rebranding capacity quickly.
Let's move on to Shopify. Fourth quarter profits and revenue came in higher than expected, and yet shares of Shopify down 7% this morning. And I get that this is a stock that, even with the drop today, is up about 150% over the past year. So the valuation might be a tad frothy, but it seems like when you look at the results of this quarter, Shopify has moved into that realm of businesses where if you put up great numbers but not amazing numbers, your stock's price is going to get dinged.
Dinged off of what was, an all-time high yesterday, a stock that's been between $300 a share and just within a few pennies of $1,500 a share going yesterday. So off 6-7%, that gets it back to just purely talk about the stock for about 8 more seconds, which is the stock is back to where it was last week. And the business, if you're a business owner and what you're focused on is what the business is doing, you're turning cartwheels again over this earnings report. 94% revenue growth, and for the quarter, which is actually an acceleration for the full year, which itself was up 86%. So, a stock, a company which has doubled its sales in a year from an already very nice level is extremely hard. It's hypergrowth of this type is just very hard for the stock market to value. It's valued at very generously, one would have to say at this point. And if it takes a couple of dollars off the price today, that's inconsequential to the longer term story.
Hilton Worldwide reported a loss in the fourth quarter. Revenue was light, and yet somehow shares of Hilton are flat today. This is sort of the reverse of Shopify. On the surface, you would look at the numbers they put up, particularly relative to a year prior, and maybe I'm missing something on the guidance they offered, because this was not a great quarter.
No, and not a great year. And the market is taking the instructions, I suppose, of the company, which is more or less to the tune of nothing to see here, move along, keep going. The stock's at an all-time high, basically. And despite the year that it has had, which has been one of losses, but the market is a forward-looking mechanism, and the future, both in the medium term and the long term, looks good. The short term, obviously, if we're talking about right now, you're looking at the last quarter, occupancy rates around the world were 40%, which was down 31% from the year before. And, room rates themselves were down more than that, down about 60%. So, yes, we all know people aren't leaving home. They're not going to hotels. and they want to. And that's what the market is looking at today, is that the knowledge that this is a service which people want to use next year and in the years ahead.
So what should people be looking for in terms of an industry metric to get a sense of travel bouncing back? Is it airline bookings? Is it hotel bookings? Is one a better indicator of the other?
I think hotel bookings is better because I think people are going to err on the side of caution where they can and get in a car. And there's a way to travel safely and to stay in hotels and Airbnbs more safely than other ways. And if you take the people's fear of flying, the airlines, I think, have gotten the word out on how safe it is regarding COVID to fly, but I don't think that word has been fully accepted yet. And hey, if you've got a car and you could get to a place by driving instead of flying, a lot of people are going to make that choice. So I think hotel is going to bounce back earlier. Additionally, I think the business travel for airlines there's a long-term impact on that part of the business.
Berkshire Hathaway has filed their latest 13F with the good people at the SEC, and Warren Buffett and his team have gone shopping, and people have noticed, as they tend to do, because when Warren Buffett and his team go shopping, the numbers tend to get pretty large. Berkshire Hathaway has taken a $4 billion stake in Chevron, an $8.5 billion stake in Verizon. They've sold off some of the stakes in Pfizer, JP Morgan Chase, and Wells Fargo. But I don't know, of those two, $4 billion in Chevron, $8.5 billion in Verizon, is one of those more surprising than the other?
I suppose Chevron is more surprising because I have a harder time getting excited about Chevron's long term, and if you're taking a Buffett quote of the best time to sell a stock is never, and being a buy and hold investor, I don't see Chevron's fortunes as being ones which will improve over the next 2 decades, let's say. And I think that there is reason to look at particularly a couple months ago, to look at things in the energy sector and discover a valuable price for something, a market overreaction perhaps. Nevertheless, I think that there are pressures on oil that are undeniable, and that this is likely to be more of a short-term than long-term victory in terms of the stock price.
Yeah, I mean, if we were talking about, if this 13F came out last April, and it was, when Chevron's stock price fell below $60 a share, Berkshire Hathaway picked up $4 billion worth, that would be like, okay, I get that. That's the classic value investor move there. I mean, I get that it's, up a little bit, but it's back above 90 now. So you and I were talking this morning, and you reminded me of something which is, I think, always important to point out whenever we're talking about Berkshire Hathaway. The natural inclination is that Buffett and Charlie Munger are the ones making these decisions. And you pointed out, well, look, this could have been Ted or Todd. This could have been someone else. I agree with that. That being the case, do you think Buffett holds some sort of veto power over the other people on his team? He's giving them a wide berth and saying, look, I want you to manage your portfolio. But if one of those guys came out and said, just a heads up, boss, gonna be plunking some money down into Bitcoin, do you think Buffett's like, whoa, what?
I think it would have to be something that you are ready to explain to Warren Buffett as to why you're making that investment. And so I'm not sure that I would want to put him on the spot. As much as one might believe in Bitcoin, when it comes out that Berkshire Hathaway owns a bit of Bitcoin, Warren Buffett, who has said things that are not complimentary toward investment in Bitcoin, would be put on the spot. So that, as an example, I think is not something that I would be comfortable making if I were working for him.
Yeah, that's another good reminder that, even if it is one of the other people on the team making the purchase at the annual meeting, or the next time he goes on CNBC to talk to Becky Quick, Buffett is the one who's going to be getting asked the questions. Yeah, do you suppose they've had a meeting about Bitcoin? Not Buffett, but do you at any point has anyone at Berkshire Hathaway in an investing manager role said to another person, I want 20 minutes of your time. I just want to talk through Bitcoin. Do you suppose that meeting has happened at Berkshire Hathaway?
I would bet plenty that Warren Buffett has had people explain and detail and has probed Bitcoin and could tell you quite a bit about it, because it's hard to believe that something that has been this front and center in the investment world for as many years now as it has, and would not have attracted his intellectual curiosity at the very least. Now, I don't think it fits into his investment style, and I don't think that he at this point is likely to change his investment style to the degree necessary to incorporate an investment in Bitcoin. He's gotten pretty far doing what he does best. So I think it's outside of his circle of competence and confidence, and is going to remain there. But I'll bet he can tell you quite a few things about it.
I can't wait for the headline: Motley Fool, Buffett has been mulling Bitcoin investment. And you get quoted. It's like, Bill Barker from Motley Fool Asset Management said the following.
You do that just to make me apologize in public for the most horrific line that I ever used in a Motley Fool article, aren't you?
I don't think it's the most horrific line you've ever used in an article. I'm not giving it that title.
No, not this. The one that I actually did use many years ago.
Remind people of the line. I know the line you're about to say, but I don't think it's the worst thing you've ever written.
The title of the article was "Warren Buffett Issues Death Threat," and I'm here. I'm apologizing for that right now. And it was an article where let's call clickbait what it is. How could you not click on that? And then it referred to a line that he had in his annual letter about what he was considering buying, and he said, I could tell you, but then I'd have to kill you, and which is a old standard joke. And the rest of the article contained what I hoped was useful information for investors, but the headline itself, although effective at attracting clicks, is one that I regret to this day. So I if anybody, you could probably Google it. It's probably out there somewhere.
Now I'm just wondering what I'm going to give to a title to this episode, but I'll think about that.
Let me bury this one. I've brought it up. Just it's a reward for those that have suffered through the entire podcast and have gotten to the end. Don't go following my lead and do clickbait headlines for your podcast. Be the better man.
All right, but just this once. Bill Barker, great talking to you as always.
Thanks.
People on the program may have interest in the stocks they talk about, and the Motley Fool may have formal recommendations for or against, so don't buy or sell stocks based solely on what you hear. That's going to do it for this edition of Market Foolery. The show is mixed by Dan Boyd. I'm Chris Hill. Thanks for listening. We'll see you tomorrow.